Another reason you really need to be in stocks as opposed to all safe stuff. Now, if you can't take the emotional roller coaster stocks, I'm not going to yell at you. It's okay. Or if you've, like I always said, if you won the game, you don't need to play anymore unless there's a reason to play. And the reason to play might be to grow potentially your wealth, to transfer more to your heirs, to transfer more to your church, as long as your church is actually staying true to Christianity, not some freaking idiotic church that has, apparently there's a Catholic church in England that had 2 gay guys marrying. Of course, the one gay guy was his pink. He had to show all his tattoos because he's so hip. He's a priest, apparently, in England. So we don't want to support those fools. That's not a church. That's, freaking straight satanic stuff. But if you want to support a church or an organization, that's fighting the good fight, like your local pregnancy center or something like that, and you say, look, I'd like to leave more wealth to them, stock's the way to go. Without question. Now, again, could I be wrong? Unequivocally. I always look at the Japanese model. And I always say at the end of the day, too, if you look at the actual history of the U.S. stock market, and everyone's, it drives you up the wall. They'll use this graph. They'll say, here is the S&P at 10, and here it is at 6,200. And you'll see the growth. It was basically nothing until 1982 because they don't log the graph. It drives me insane. In fact, my man Anomaly did that today on Facebook. He posted something about the U.S. debt basically looking like it was zero in 1950 and now had this massive mountain, just like rocket ship to the moon takeoff in 2008 or 20 or something. I was like, dude, you got to log these charts as a percentage increase from the previous year. Anyways, it drives you up the wall. Same thing with the S&P 500. Oh, the S&P was basically nothing, and now it's huge. No, you log it. But anyway, what I'm trying to say is, if you look at the history of the markets, there's been plenty of times where bonds have actually outperformed stocks for an elongated period of time. It's just a fact. So I'm not going to sit there and tell you not to be in bonds. Absolutely. I like annuities, for instance. I got bonds. I got long-term bonds, government bonds. The longest, most risky bond you could have, other than credit quality, I own. And when the interest rates go down, I make bank. When the interest rates go up, I lose bank. But I'm always clocking in that 4% yield is what I'm getting. And as such, well, that's 4% of what it was when I bought it. Well, that's maybe 4.5. So I'm clocking that in. But that's more of a stock mentality for me to see if the interest rates do drop and I can collect some sweet money on the upside. We'll see. Hasn't worked out yet. Even if the interest rates drop by 50 basis points, it's hard to imagine I'll be making bank because I did take it on the chin so much. But that might be not a bad dollar cost averaging to say, hey, it hasn't done what I thought over the last year and a half. Maybe add some more to it because at some point it could. I just don't know how much they're going to drop interest rates. I doubt much. I think we're probably close to an equilibrium. I'm very comfortable where we are from an interest rate perspective. I actually do not believe at all the interest rate dynamics are what drives economic activity. I find that to be silly. And proof that is history, without question. All right, anyway, so going back, why need stocks? I just read this article in the Wall Street Journal. Amazon's has now more robots in their warehouses than they have employees. I said, that's very interesting to me, because when we were on our Maui trip, talking about the pineapple guys, so we're on our Maui Gold pineapple place, and they can't find workers in Maui to do the job that they used to be able to do because it doesn't pay enough. I mean, they have to be competitive from a pineapple perspective, and fighting against cheap Thailand and fighting against cheap Costa Rican labor is hard. So they're a premium product, that means it costs more. It's a better product, most likely. I think it was fantastic, but costs more. So you're basically pricing out a large market share because it is a premium product. But the people actually picking and doing the harvesting and planting are all 60s and older. And they've been doing it their whole lives. And they're going to be retiring at some point. And I said, what happens then? This guy's tour guy who's been doing it for 48 years. Because that's the challenge. We just can't find the people to do the work. And we pay more than certainly our competitors overseas. But it's hard to pay, what you could get at Starbucks, for instance. So, and that's a hard, back-breaking job, planting and harvesting pineapples. So he alluded to automation and robots. And I asked him about it. He had to be very, he had to walk a tightrope there. But the facts are, robots are going to come and do the planting and harvesting for us, without question. And it's going to be sooner rather than later. Now, they still got machines that can help with the harvesting, but it's not, you still need human beings in terms of pineapples to go in there and actually pick the pineapple. But the point being is, the biggest cost to corporation companies is labor. Nothing comes close. Labor is the biggest cost. When you're able to replace human beings with robots, most likely you're going to increase productivity. Not everybody, but most likely there's a lot of jobs that will be lost to robots, and productivity will rise because they can do the job 24/7. They don't take time off. They don't call sick. They don't get in fights with their HR people. They don't need to lead, bow before the DEI mafia. They don't need all that stuff. Now, they break down. They need to be fixed 100%. But a human being breaks down, needs to be fixed too, if that makes sense. And a human being draws significant salary. Healthcare is a big expense. And it's only a matter of time for the automation comes to basically level the playing field. I hate to sound like that because I don't like it, but it's inevitable. So not only won't we need labor, and labor is one of the biggest costs there is. I mean, literally the biggest cost there is. But they'll reduce labor costs and increase productivity, which increases profits. Profit increases the stock price, without question. Price earnings ratios. Earnings drive stocks. Earnings go up because labor costs go down, productivity increases. Massive expansion potentially in the price of the shares, without question, which means massive growth. And of course, more and more wealth inequality come from that, which is another reason we need to get some sort of wealth tax, some sort of taxation. Again, my thing, I mean, they want a wealth tax. I don't think it's an efficient way, but I want to actually make sure that no one, Warren Buffett, Bill Gates, all these clowns, can't donate tax-free to their charities. It's insane that they can do this. Warren Buffett donates to the Gates Foundation. Bill Gates donates to the Warren Buffett Foundation. No one pays taxes. It's such a freaking scam. It's such a scam because it's all charitable. All charitable. We're doing good works. Good works, I tell you. And I think this real estate market's slowing down here, man. This house, these are big libs who live here. They put that for sale a couple weeks ago. Still up there. And I just think the real estate market's slowing down. I wonder if people are trying to sell while the getting's good now. And as such, there's going to be I don't want to say a mass increase in product, i.e. houses for sale, but enough to drive the prices down. Because, interest rates are lower now. I'm not sure if that's affected the 10-year or 30-year in terms of 30-year mortgage. But it just seems to me there's a lot of people trying to get out while the getting's good. I think they might be too late. You should have done that a year ago. Because that house has been for sale I haven't looked up the price. I will, but it's just, and even on my own house, I'm on PenFed for mortgages. So every time I log in to pay my mortgage bill, it gives you a running tally of what they think your value is, and it's fallen. Not a huge amount, but it's certainly fallen. It's worth way more than I bought it. Of course, I put a lot of money into my house too. I mean, a hell of a lot of money. So it's not like, oh my goodness, you made $1 million. Not like that at all. Man, they used to have freaking around here. We used to have blackberries. I don't see them. I used to be able to come in here and just freaking go crazy on blackberries on the side of the road. I don't see them anymore. Really getting on my nerves. I'm not sure who at the town or whoever cuts it up. But it's like, dude, you leave the blackberries alone, man. Blackberries not only feed your old buddy Josh, but they feed nature as well. Anyway, so if you want growth, because remember, there's no growth in bonds. I cannot stress this enough. You only get growth in stocks, all right? Bonds give you a fixed rate of return. That's why they're called fixed income. Now, for me, it's not growth. When I took my gamble on a bond, it's not growth. I mean, it's a grow hope, but it's not growth in terms of compounding growth. You're not getting that. I just said, hey, The bond market got crushed so badly for basically 3 consecutive years. I mean, we're talking massive losses. I said, let me go up there and scoop some bonds up for cheap. And if the rates level off or even go down, I should be able to turn a quick profit on that. It did not work like I anticipated, not yet, it could. But that's not a growth. That's just a quick speculation for quick profit margin or profit. That's not growth. Growth in stocks are based on earnings and dividend yields and stock buybacks. It's just all there is to it. And so, which is compounding. There is no compounding growth in bonds. You don't get that. I cannot stress this enough. So if you want growth, you have to be in stocks. There's no other way around that. If you want gain, you can get interest income in bonds. Absolutely. I got no problem with that. Annuities, I love them, but not in bonds. All right, anyway, so that's why if you want growth, you have to be in stocks. If you think the market has upside, which I absolutely do, or else I would not be in stocks, you got to stay in it. If you've won the game, you don't need to be in stocks unless you have a reason to be in stocks, which is you like the idea of partaking in American growth of the economy. That's fine. I mean, whatever, but don't do it because you think you have to, if that makes sense. God bless. Smash. We'll see you.